goal, then the central bank could maintain rates steady for longer. If, however, the job market were to weaken unexpectedly or inflation were to fall more quickly, then the Fed could adjust rates accordingly. Powell.
All right, you guys, did you hear that? My name is Sophia Quinn. I'm your investor professor, and we are kicking off this video with a news blurb about the breaking news. Y'all know that is my biggest ick, is that everything is breaking news. But your Fed chair, Jerome Powell, came out basically saying, we're not changing things. He basically said that we're close, but we're not there yet. And that they're not changing the inflation rate. And that they may only be interested in changing the inflation rate if things take some type of topsy-turvy. In the inflation video that we did maybe 2 days ago, we talked about inflation being baked into the self-interest of the government. So inflation is always a thing because the government is using inflationary dollars to pay off its debts. So the feds are basically saying, hey, we have more debt to pay off. So American people, your suffrage is our benefit. So we do not feel like we need to adjust the interest rate, whether it be on the interest rates of mortgages or home loan mortgages or auto loans, whether it's the federal interest rate or whether they have to do with inflation, and they're all tied together in terms of the federal interest rate. They said we're doing good because you're working, right? You're still paying taxes. You pay tax on everything. So they're still getting their money. So there is no real incentive for the feds to adjust the interest rate, honestly. And that's why they're not doing it today. The CPI rose 3.3%. Remember? So that means the CPI rose 3.3%. That means that your dollar went down 3.3%. You can kind of think about it like that. Also, so with that news, right? Well, how does that affect the market? So the market is down. S&P is down 0.22%. The Dow is down 0.40%. The NASDAQ is down 0.03%. These are not at all significant decreases. And personally, in my personal portfolio, I am up 1.3%, raking in about $500 right now. So know that, and here, I'll be able to exactly tell you why. Because not all my stocks are pegged to the market, right? That's one thing. When you're selecting your stocks, you got to select stocks that are either pegged to the indices, whether it be the Dow or the S&P, or stocks that are not, meaning some stocks ride against it. When that's up, they're down. When they're down, the other one's up, right? Some of them are inverse and some of them ride with them. Most of them ride with them. But right now, my Amazon's down a little bit. My Bank of America's down a little bit. Remember we talked about those funds? I talked about the Fidelity Balance and the Magellan Fund. So my funds are down a little bit. So what am I going to do? Buy more funds. Yes. And my Microsoft is down a little bit. You guys know that is my sweetheart. And my favorite ETF that I'll be rolling with is SPY, and that one's down a little bit. But my Tesla is up 4.76%. Okay, Tesla is an inverse. It normally rides against the indices. So when the Dow and the NASDAQ, when they're down, my Tesla normally be up. But my Google down. Google is a bear, okay, honey? It is a bear. And I'm only right. I told you, I gave you guys that long story about me saving up all the money to buy the Google stock. So it's down. I'm not surprised, but my total gain on that Google stock that I struggled with for years is 33%. So it's not that bad. So what I'm going to do, because I buy in the dip, is I'm going to put some more money on my fund account. And my TQQQ, which is my boo, that was a huge stock for me after the pandemic. That one is down right now. It's only down 17%. So I'm going to do a limit order because I never buy market. You're gonna miss me. I never buy market. And we're gonna do a limit price, and let's see if I can get it. Right now it's $84.86. So I will probably set my price to be, it's early in the day right now, and my initial feel, and now we'll get into tracking your last price, and there's actually a sheet where every day you track your price. So then when it comes time for you to buy or sell stock, you have a very, very good idea of what number you should hit for your limit price. But me personally, I do look at the chart a little bit. Like I told you guys, I dipped into the wicks and the calls and puts. So I do read charts elementary, like a school kid. And I would say, honestly, it's early in the day. I'd set my price for 80. I'm feeling like $83.99, but I think I'm gonna get that. So I might go down to maybe about $83.85. Now I bought my TQQQ at $78.55 per share. So I might be cheap and just leave it alone. But that's what's going on today. Your Fed chair, Jerome Powell, he basically said, I know y'all hurting, but it's good for us, so we're gonna keep it. And one thing too, did you guys see that the U.S. Treasury bond are up? See, this is why we are talking about, this is why this is an investing for beginners class. And I'm gonna have to do a part 2, because what I wanted to come on here and talk about is savings. Because when the stocks are down, right? Stocks are down, the bond treasury notes are up, right? So there is an inverse relationship, and that's why having these three pegs of retirement, your stocks, your bonds, and your savings, is honestly the way to go to hedge out inflation, to hedge out everything that's going on. Now, I made a comment when I spoke to somebody else's comment saying that the Treasury Direct was the website was down. It's not down. It's not down. And when people are afraid and when there's uncertainty, that is the time that you get your money together and save and invest. We will be ending every video going forward with our class motto, save and invest. Okay? So when we come back, next video is going to be about saving.